So today I'm gonna do an interview with one of my favorite lender. I'm gonna ask him questions and let you know what kind of things to expect when you are buying a home in this current market. Stay tuned to the end of the video because it'll change your life if you want to buy a home very soon. Thank you so much for coming to the interview today. Can you tell me your name, your company name, and how long you've been in the business?
Yeah, absolutely. My name is ciǰ̌, and I work for Fairview Mortgage Capital, and I've been a mortgage broker for 10 years now.
It is very important to know the difference between pre-qualified, pre-approved, and fully underwritten. Can you please tell the audience what is the major difference between these three loan terms?
Yeah, absolutely. It's very easy to get confused between them because a lot of people have their own definitions and sometimes they're even used interchangeably. But within the industry, the general belief of how the differences are laid out between them is that a pre-qualification is the most basic of reviews of your file, and that's typically going to be looking at your credit score, and then you're going to tell the loan officer about your income and a few other things like how much money you have saved, and that's just it. It's all verbal, and that's really not a very solid approach to go with. And so most people recommend at the very least to get pre-approved. And a pre-approval is going to require a credit check as well. But then you actually submit your documents to me as the loan officer, and I will review the documents and determine how they fit within the loan guidelines for the loan program we're doing. And the last, which is certainly going to be the most competitive pre-approval within this market, and that's going to be a fully underwritten pre-approval. And that fully underwritten pre-approval is that after I've reviewed the documents, I actually submit the file to an underwriter, and the underwriter reviews them and signs off that says, yes, they do fit the guidelines. And so that's really important because the underwriter is the one that actually makes the decision on whether or not you get the loan.
Perfect. So it seems like I want to put the audience in perspective. If you are fully underwritten, Mike, it'll be very fast process to, once you have that, to close on the home that you are buying, because the underwritten process is done, the loan approval is done, everything is ready. You just have to wire the money and buy the home.
Absolutely.
Basically.
Yeah. So when you open escrow after you've already had a fully underwritten approval, really there's only two things that the underwriter will still need to complete the file, and that's just the appraisal and then your evidence of insurance. So you want to know how much the home is worth that you're buying, and then obviously you want to know how much your monthly insurance charge will be, and we also want to make sure that you do get insurance on the home. So those are really the only two things, and that can be done fairly quickly.
Very quickly. So, Mike, I have always wanted to know what are the do's and the don'ts that the buyers should avoid or do when they are in the loan process. Can you tell us more?
Yeah, absolutely.
In your experience.
So there's going to be do's and don'ts that fall within the three different categories within your qualification. So the three categories that go into your qualification are going to be credit, income, and assets. So the credit do's and don'ts for credit are going to be do keep your credit card balances low as possible, and ideally paid off. The don'ts on credit will be don't open up new credit cards, don't charge up the new credit cards. I know it might be exciting to see a new home and say, oh, let's go put some a couch or a new bed on the credit card, but wait until the escrow period is over with before you do anything like that. And then the second category is going to be income, and really the do's and don'ts for income is certainly don't quit your job, because the underwriter wants to make sure you're making income, right? As far as the do's are concerned, just work as hard as you can. It's a great thing to work hard, and sometimes you get some extra bonuses that might help you get some money to furnish the home down the road. The last category is going to be assets. So do's and don'ts in assets will be, certainly don't make any large cash deposits, because a lender needs to know and document where the money is coming from that you're buying the house with. And so if you make a large cash deposit, the lender may not include that as a verifiable asset, and you may not be able to use it if it's a cash deposit. And then the dues for assets will be, especially if you have time to get prepared for this, try to keep the bulk of your down payment and closing costs in 1 to 2 accounts maximum, because it's just going to make the process a lot smoother for the documents that we end up reviewing.
Awesome. Great info. So Mike, tell me what are the documents the buyer should expect to prepare when applying for a loan to purchase a home?
Yeah, absolutely. So there's going to be an initial set of documents. Now, as we go through the escrow process or the underwriting process, there will always be additional documents required, but when you first have your first conversation with a loan officer, or when you first apply for the loan, it's really important to have this set of documents prepared and located, because sometimes they get stuck in a box somewhere in the house, in the closet, and it's hard to find. So
if you don't have it digitally.
Exactly, if you don't have it digitally. And so those initial set of documents will be 2 years of federal tax returns, 2 years of W-2s or maybe 1099s if you're self-employed.
Self-employed.
Yeah, and then there's going to be 2 months of bank statements and 30 days worth of pay stubs.
Awesome. So those are the documents needed if you want to start the loan process.
Yeah.
And have it ready, because it makes the process much smoother if you have them and you apply them when the lender asks you.
Absolutely.
Awesome. So Mike, I know you have a lot of experience, and this market is very tough, very discouraging to a lot of buyers. What kind of things, tricks under your sleeve to help reduce the payment for home buyers?
Yeah, absolutely. So right now in this current market, the biggest hurdle that buyers have to get through is where interest rates are these days.
Yes.
And
very
so
high,
if we can do anything to lower that interest rate, it's really taking the power away from the strongest hurdle in this market. And so the way that you can lower your interest rate are, they're called buy downs, and there's 2 different types of buy downs. The first type of buy down is going to be a permanent rate buy down, and that's essentially an upfront fee that you pay the lender, and in exchange, the lender gives you a lower interest rate for the next 30 years on your 30-year loan. And so it's important to know, if you're going to pay for a permanent rate buy down,
yes.
Let's say it costs $5,000, you want to make sure that your monthly payment drops enough for long enough to be able to let you recover that $5,000 that you paid up front.
Exactly.
So that's really important to calculate when you're considering a permanent rate buy down. And that's a very easy equation that your loan officer can go through figuring out for you. And then the second option is going to be what's called a temporary rate buy down. And what that looks like is, for the first anywhere from 1 to 3 years, your interest rate is going to be lower than the market rate. And then at the end of that introductory period, the interest rate would go back to the market rate. But it's really important for everyone to understand that whenever you talk about an interest rate being lower at the beginning and then potentially being higher later on, the plan is to make sure that you refinance before the payment goes up. But sometimes
that's the goal.
Yeah, that's the goal. But we, live in a world where sometimes we can't predict the future.
Mm-hmm.
And so just in case for some reason you can't refinance, it is important for people to understand that when you are qualifying for a temporary rate buy down, you actually qualify on the highest payment that mortgage payment could ever go to. And that's how we can make sure that we retain the strength of the mortgage market in our economy.
Awesome. That's very important to know. Thank you so much, Mike, for this lovely information. Hopefully the viewers gain a lot of information and you are more armed to go and apply for a loan with confidence, and you know the do's and don'ts of a loan process. And thanks again for being in this interview.
My pleasure. Thank you so much for inviting me.
Absolutely.